All right, everybody, thank you, and welcome to our session on data economics, quantifying the financial benefits for data ROI. We'll have a few different speakers in this session, including Sunil Soares, who's the founder and CEO of YDC, Joseph Sommer, who's the managing director of E&Y, and Michael Cappetta, who's the chief data officer at Northwest Bank. I will get out of your way, and I will conduct some questions. If you have questions, see me online.
Good afternoon, good morning, everybody. Sunil Soares. So what I'm going to do today with Mike and with Joe and actually Max is talk to you about data economics, valuing data. So we're not going to talk about operationalizing data, data privacy, data governance. We're going to talk about how do you calculate the value of data like any other intangible asset. So if you go to the next slide.
You should have a clicker up there too.
I do? I don't, oh, okay. Okay. So a lot of CDOs generally come in from the IT side, data management, data modeling. But we think what will happen over time is chief data officers need to speak the language of the business, which increasingly is happening, but also be able to talk to finance, FP&A. So in terms of my background, I have an accounting background and I learned data. So I knew nothing about data many years ago, but I became a Colibra 5-star ranger. And one of the things that always happened when my team would implement Colibra, the client would blame us. You never blame yourself, right? You'd blame us and say, software doesn't work, the systems integrator is not working, because we don't have stewards in Colibra or Elation or Informatica. But the reality is there's a reason there's no stewards, right? People are not stupid. It's because you weren't able to explain to the business the value for why the data steward should spend 10, 15% of their time. So that's really the thesis behind this. So a year ago, the EDM Council, Eric's right here, asked me to co-chair the Data Office ROI Working Group. We co-chair it with EY, with Matt Knoll. He's a colleague of Joe. Matt's right there. So what we did, and Matt's also done a lot of groundbreaking work in this area. It's all tied back to DCAM, CDMC, and the ESG. Kind of built a framework around how do you think about the ROI of data, starting with how do you organize for success. You see that it's not components, capabilities, sub-capabilities, verboten. Eric's going to have a problem if I say that, but because that's DCAM and CDMC specific. But step 1.1 says make the CDO accountable for data ROI. This is all free. You can go to the EDM Council website. So this is the framework. This paper is version 1.1, and it's 80 pages long. It's got about 25 case studies. The first sentence in the paper was the average tenure of a CDO is 2.4 years. And then the EDM Council said, Sunil, remove that if you don't mind, because no one will read beyond that. But the reality is it's true, right? And there's a number of reasons for that, and one is being able to explain the value of data. If you go to the next slide, so this is a fundamental thesis behind what we're thinking about here. This is United Airlines. So 3 years ago at the height of COVID, a lot of the airlines were running out of money. And what happens when you've got liquidity issues? Your back's against the wall, you start doing aggressive things. So in this case, United Airlines, I'm a Mileage Plus member, that's their loyalty program, wholly owned subsidiary. They valued it. So the way Mileage Plus or any loyalty program works is they'll sell miles to the likes of Hilton, Hyatt for 2 cents a mile, and they'll buy miles from the mothership at 1 cent a mile, so they make a profit. So they valued this with the Securities and Exchange Commission of $21.6 billion. And when you talk to people who do these deals in airlines, American did it, Delta did it, foreign airlines did it, the value is typically 20 to 40%. Customer data is worth 20 to 40%, which was actually more than the value of United itself at the height of COVID. Now, United since then has become more valuable. If you extrapolate that to the S&P 500, excluding the FANG, Facebook, Alphabet, Netflix, Google, Tesla as well, that's $32 trillion. We think there's an alpha of at least 2%, so $600 billion. That's not fully reflected in the stock price, right? So if you go to the next slide, I should click on this. Okay. So, we think this concept of data economics has a lot of internal and external stakeholders. So clearly the chief data officer, as I said, average tenure is 2.4 years. We've got the data ROI working group that's, got a number of members. We meet weekly. And this was voted as the #1 priority by chief data officers as part of the EDM Council a couple of years ago. investors too. So intangibles make up 80% of the S&P 500. But when people think about intangibles, right, they're thinking it's goodwill, it's intellectual property, workforce, loyalty. No one's thinking data necessarily. And that's important. So if you're the chief marketing officer of Coca-Cola, you're definitely interested in the brand value of Coca-Cola. If you're in the legal department in a software company, you're probably thinking about the value of your patents. That's another intangible. So we believe chief data officers need to be thinking about the value of their data. And I know Joe is going to talk more about that. There's a number of other constituents as well that I won't get into. So think of this as a data economics roadmap, right? So if you look at this, it's a sample roadmap. Think about use cases, right? So we're not saying you're going to implement a lot of use cases. These are cataloging your use cases. You might already have maybe a churn model that you're implementing in Snowflake or a propensity model. So you're rolling out use cases. Then you've got to think about people. So I've talked to multiple chief data officers and they say, this is important, but I say, who's actually accountable for it? So if you've got a data governance lead, you've got an analytics lead, you might have AI lead, do you actually have somebody who's responsible for data economics, who's responsible for aligning with FP&A, with the business, who's got a finance background? Or are you just doing it in your part-time? If this is foundational to your career, you better have the right level of people focused on it. And then, align that back to your BI, and then potentially think about how that ties into your data governance platform. So one of our clients is thinking, okay, we understand the cost per critical data element, but can we think about the value per critical data element? So a bank, every time you certify a critical data element, how much risk are you reducing? So now you can have a discussion with your data stewards about, okay, if I need so many hours per week, this is the value we're getting back from that perspective. So what I'm going to do is that it's a little complicated logistically, but Max is actually going to do the demo, and I'm going to vocalize. We're doing that. So Max? Okay, yes. So what we did was we took while we're waiting for this to come up, we took the EDM Council's data ROI framework, and we said, how do we operationalize that from a platform perspective? So our platform takes it and implements it here. So this is a hypothetical company, not real data, and this is a diversified financial institution. So what we've got here is we've got the value of current and potential data products. So when we think about data products, we're not necessarily thinking something physical that you're implementing in Snowflake or Databricks. We're thinking in terms of regulatory compliance, reputational risk from ESG, ransomware, GDPR compliance. This is current and potential value of data products. And then what we try to do is map everything back to your market cap. So we want to start tops down and say, what's your market cap? So it's $40 billion. What's your net worth? $30 billion. Brand value, so Matt's done a lot of work with the EDM Council around how do you estimate brand. There's actually great estimates out there. If you're a MasterCard or a Visa, your brand's more valuable. If you're Coca-Cola, it's more valuable. If you're in a more commodity industry, potentially that's valuable. And then we say, okay, what's the value of the data, current and potential? This is current value. And everything else falls into this residual bucket, innovation, talent, IP. We're not focused on it. So we say, okay, the value of the data is 4%. Great. But we scroll down a little bit, Matt. So I think this is the key point. What's my ROI on data? What's my return on equity? There's a lot of other things in here, but fundamentally, if you're a CFO, you're saying you report what's the return I'm getting on equity. You report that in your 10K, you report that in your Investor Day presentations, but what's the ROI I'm getting on data? I've never seen anything in less than triple digits, right? But you've got to think about it that way. And then we've got what's the current ROI for current projects, potential ROI. We even said, okay, let's think about Snowflake, not the value in terms of cloud migration and reducing cost, but all the data products you're implementing in Snowflake, right? If you're spending 6 digits, 7 digits on Snowflake, what's the value of that data? So that's what we're trying to do here. And another interesting metric is how much is my spend on an annual basis versus what's the value of the data. So I've got a house, it's worth $500,000. Maybe I'm spending 3% a year on mowing the lawn, property taxes. So think about the spend on data in the same context. And then you can also break this down into offensive data products, defensive data products, but we'll skip over that. Next slide, Max. And then this is, very similar if you ever implemented This is the mythical data product company. The company, if you scroll to the right, Max, bottom, if you don't mind. Can you scroll down? Okay, yeah. This is a list of all the data products right here. So you'll see these are really domains. If you've ever implemented domains, right, in data governance, these are domains. But all we're trying to do here is demonstrate value, right? What is the value of everything I'm doing? So I've got regulatory compliance, then I might have something on anti-money laundering. I've got a value for it, data privacy, greenwashing. And this is, as a former consultant, you have to be mutually exclusive, completely exhaustive. Don't double count. Finance will have a huge issue if you double count. So now let's drill down here. So I take one of these, and this is a simple business case around a bank which said, when the chief data officer was hired by the CEO, he told her, that's great, I just don't want any MRBAs, matter requiring board attention, from the Fed. And in very extreme cases, right, there's a large financial institution rating system. If you get a deficient rating, the Fed won't let you buy back stock, they won't let you pay dividends, they won't let you buy other companies. That's a huge challenge. So we went through this analysis. I won't go through it in detail, but it basically goes through what are the comparables, what's the inherent risk, the residual risk, and coming up with a number. And you'll see in many cases, a lot of our data governance programs are focused on the compliance side of things, so what I call defensive. You can actually pay for the entire program, the entire data management program, just with defensive. So all the offensive use cases you sort of get for free, which is pretty cool. So that's one case. And then the other one, this is more using probabilistic approaches. So we use a Monte Carlo simulation, normal distribution, 10,000 simulations. And you'll see right here, you have different variables. You have ranges of variables. The probability that you get fined has a range. The quantum of fine has a range. So you can actually create what we call a loss exceedance curve to say before mitigation, after mitigation, and what's the reduction in risk. And that can also be used to value your data products. And then finally, Max, what we've also got, think of this like a Bloomberg for data economics. We say, okay, can we actually pull together fines? A lot of people say, I just don't know what the anti-money laundering fines are or what the GDPR fines are. So we've scraped a lot of data, and we can have min, max, median. We've even got market data from different data sources about what different data sets are worth, all focused on thinking about this problem. Okay? So I will now turn it over to Mike, and he will walk through the rest of his presentation.
Thanks. So can we get back to the slides? I'll let you finish that up, Max. Thank you. Oops. Still waiting. So I'll just start while they're working the slides a second. There we go. Let me just click through these. So everyone, I'm Mike Cappetta. I work for Northwest Bank as the CDO. I have 25 years or so in retail banking experience, commercial banking. I guess that makes me old at this point. I've had all kinds of roles in strategy, operations. I've been a business manager. I've managed P&L statements. I've managed technology programs. I've managed the technology organization. And nowhere in my background do you see CDO. And about a year plus ago, I was asked to be the CDO. And I said, what the heck do I do? So Northwest Bank has been in business for 127 years. We've won 7 J.D. Power Awards, yay. We're great at customer service. 6 of those are for #1 slot in our marketplaces. We're headquartered in Columbus. About 700,000 customers, $14 billion in assets, $1.4 billion market cap. We trade under the symbol NWBI, should you want to be a shareholder after this presentation. And the day after I got asked to be the CDO, I went home and I had a beer. And I just sat back and I said, I don't even know where to start. And, well, actually, there's a whole story behind that. I immediately called a friend that I had in Minnesota who I knew for multiple years, who worked at Target as a senior BI leader, because I didn't have a senior BI leader. And I said, will you please let me hire you? And she said, no. I was like, well, what the hell am I going to do? So I begged with her. I pleaded with her. I gave her a really good salary. And she joined our team. And so started my journey with this lady at working at Northwest Bank to now be the CDO. And I had all the problems. I had an executive leadership team that, quite frankly, didn't know what to do with data. I had data literacy issues. I mean, I asked people for user stories to help me value data and help me come up with some outcome. They didn't know what I was talking about. There were crickets in the room, literally. I had no measures. I had no KPIs, no way to value a shadow P&L. I had nothing. And I inherited an architecture, inherited an infrastructure that was built by technologists who didn't even know what a semantic layer was. A year into this job, I know what a semantic layer is. And didn't know how to speak to our business partners about business and what they were going to use this stuff for. So immediately did a whole reorganization. I really set up the team to point at business partners. We got our leadership team engaged to help start figuring out where we wanted to place our investment. We spent the time to understand the technical limitations of the environment because we knew we were just going to get started. And we really wanted to figure out where we were going to use machine learning on our data to help us grow into new capabilities. And finally, we tried to set up some basic business and operational change management practices to help the cause, get the thing that we were creating for value into production to realize that value the right way. So I started the journey and almost stopped for a second. And then I was in a giant presentation with all my peers, the operating committee, and I was asking for money. Great, asking for money. And I said, here's what I want. Here's what I could give you. And I was stopped cold by our CEO. And he said to me, Mike, stop asking for money and instead tell me how much value you're going to bring. How about $3.5 million? And I would turn sheet white. And I said yes to $3.5 million. I'm not too sure what I was thinking at that moment, except, oh my God, now I got to come up with $3.5 million. So being an ex-business manager, I knew how to use data to get money, but I didn't think I could get it as fast as our CEO wanted. So we started on the process of using data to generate sales. Did one POC on one channel, 6 data sources, 250% return on investment. We did some efficiency projects. We do 1 to 2 a month right now, 20 data sources, and we're saving about 2,000 hours or so right now with the line of sight to about 4,000 by the end of the year. So I want to pause a second and take a quick right turn. As I started this journey back here to get to this so far, this was underway. I was like, what's our data really worth? I didn't really have a clue. And at that time, Sunil, through our data governance officer at the bank, contacted me and said, hey, do you want to do a study? I was like, yeah, let's see how much this stuff is worth. So he did a study evaluating our data. We chipped in at the time what we thought were our right user stories, and I'll get to that in another minute. And he valued our data at about 16% of our market cap. That was an awful lot of money for us. If you think about it for a second, it's about roughly somewhere between 1% and 2% of our total asset base. That's huge. So I kind of didn't believe it at first. Then I started seeing numbers like this. And I said, I'm just going to go rerun the numbers that Sunil and team provided us. And now I think he was too low. I think the real intrinsic value of data that we have is about 3% of our entire asset base, which puts it on scale of what I honestly thought the net gain would be for everything that we could sell, because our conversion ratio was about 3%. It's like, okay, it seems to line up with the direction that we were moving and the direction that we were thinking. Okay, so the big money chart. My entire data team, sorry I couldn't put numbers on the left side of this chart because it's really amazing when you think about it. Our CFO didn't like it, especially right now. We're about to announce earnings on Monday. So he put a kibosh on that one. The fundamental is, though, that the entire data team, all the people, I have 14 people working on the team. If I include the data governance team, that's 17 people. All of the servers, just the data environment itself on-premise, takes 20 servers. We have an Azure environment. We have a Cecil environment. We run Actimize in the cloud. We're going to break even on all of those costs by just about this year based off of those efforts. I haven't even started on some of the big ones yet. So I'm shocked at how fast this is moving. Some of our success drivers, we've had lots of issues with data literacy. Data governance has been our big thing and really increasing literacy. We've been at that for about a year and a half or so. And data democratization. We're pushing out the data environments to all of our departments as fast as we can. So we've targeted to get what is our simple semantic layer, Power BI, and some very simple data flows out to our users to just start using data and generating individual outcome within lines of business, independent of what the data team can do. Simple task to just get it out to 100 people this year. Next year, we're going to try and double that and do 200. Our goal would be to get everyone in corporate, which effectively is about 250 people, 300 people, to be very literate in data. We did our YDC, data economics assessment. We selected some POCs. Now, I wrote down some POCs here, specifically around leads and prospect management and next best product. And that's where we started the journey, because it was like bread and butter to like any sales organization, and especially any bank. You're always mining for a next best product. But believe it or not, what we've learned in this journey so far is those are not the big ones. I'm not going to tell you what the big one is, because I want to save that for like next year. But the big ones are 20 times this size based on our data and our current environment. So we started chasing these because we thought, yeah, they're going to really add up. And we started chasing the lower value ones first and not the highest value one. I'm actually kind of glad we did some of these lower value ones because we got really good value back. But on August 14th, I go to our ITSC. I'm going to tell them, you know what? We're missing the mark. We can do 20x based upon what we're thinking right now. We have all kinds of infrastructure issues. I like to just call it a hot mess. 3 different platforms, built by technologists. No real sense of what the business wanted when it was constructed. I just inherited this thing, and I'm like, I'm just going to figure out a way to do something. And that's what we just started doing something. We're really big on advertising our successes. So every time we get a success, yay, we do a weekly newsletter. We do metrics to our senior board telling them, yeah, we're generating value, right? So we're really good about advertising our successes, but in the language of our business. When our chief retail officer shows up and says, hey, book of business, right? I need to do this and generate an incremental 2%. We speak that language now, as opposed to telling them, yeah, you could take these 3 tables, do a join here, create this Power BI report, get this to all your bankers, and they can do this and generate an outcome. No, we talk lift to him. When we talk to our risk partners, we talk about minimizing impact to the institution on portfolio differentiation, risk to the portfolio, risk to our customer base. So we've changed our language. That was very hard for us all to get in our brains and our DNA. We also go the other way. We tell our data team exactly where the projects are, where the work is that they're doing, adds the value to the bank in terms of dollars and cents, so they get it. Oops, sorry, wrong way. Next big challenges for us, infrastructure. Our demand is now outstripping our supply capability. I have a backlog that is 18 months big right now and growing at a rate of 30% a quarter. I cannot keep up with it. We're just absolutely crushing it in some ways. We're also looking at the next best things that we need to do. We are really focusing in on trying to find that 10, 20x thing and get to that next. And we're making big investments in training. I need a whole new set of skills to like turn this thing that is the data environment into that $3.5 million plus revenue generating machine that our CEO expects. But I'm not worried about it. At this point in time, we're going to get $3.5 million easily. Next year, I think we're going to do 2 or 3 times that. And I think that's well within our capability. The machine is going faster and faster. The discovery is on the journey. I didn't expect as many efficiency items to show up out of the woodwork that did. I have a rapid response team right now that we created, one guy, that basically does reporting all the time and automation. I could probably have 3 people do it, but he does several automations a week now. I told you about our backlog. Our backlog is continuing to grow. We have a 5-year projection right now. That's about 12 to 15 times the current data team's expenses. So if I just project this forward, roughly 5 years, we'll be at more than 10x of what we're doing today. And then data democratization is absolutely been a shot of adrenaline. As soon as we started telling our business partners what they could use all of this data for, they just started doing it. And I was amazed. We have some superstars right now that have turned out dashboards to cause inflection for our sales team or operations units. That's far beyond anything that we could have done just on the data team alone. We partner with these people. We help them. But they're creating outcome far in advance of what we could have ever done alone. Pause right there. Say, Say thank you for a second, and I'm going to go on to Joe.
Okay, thank you so much, Michael. That was, you have this, thank you. Thank you so much for that presentation. What we saw and heard was that if we can tie data initiatives into economic value, this is a language that the business can understand. And one of the things that Sunil has done is accelerate how quickly you can have that conversation. And so looking at the materials that I want to share with you, this is me. I've been with EY for a decade. I was at UBS, at Credit Suisse. I work with data. I try to deliver data value by protecting data, enabling it for commercial purposes. And that's fundamentally built upon this idea that data is an asset. There's some predecessors. I think Doug Laney is speaking in the other room, and he's championed this idea of the infonomics for some time. I was a beneficiary of that and learning how firms in the accounting profession are not even thinking of data as an asset, but we should be. And we should be, but it's challenging. If you look at the definitions of what an asset is, it's a resource. It's collected in transactions. It could be controlled. It delivers future economic value. So these are ideas that are pretty indisputable if you look at data. The International Association of Accounting, the International Accounting Standards will also add for data and intangibles that it lacks substance, that it's identifiable, that it could be controlled, and it has probable future economic benefits. So you could see the definition of an asset and the accounting definition of what an asset is align pretty closely. And this is built into market value. If you look at where we were 20, 30 years ago, companies were valued based upon their physical assets. In today's economy, firms are valued based upon their intangibles, of which a giant piece is data, which we're not even measuring. Shouldn't we be moving, if we accept the fact that data is an asset, shouldn't we be moving to at least having some sort of ability to understand what our data is worth, especially if it's something that could be done quickly and efficiently without it being a giant lift? Especially if I'm investing, if I'm a portfolio leader, if I'm an asset manager, and I want to understand the companies that I'm investing in, what is their data worth? That's part of that portfolio. And there's some reasons that in the past the data is not considered an asset. One of them is after 9/11, there were some court rulings that said the drive is worth something. I'll reimburse you for the drive you lost in 911, but I won't reimburse you for the data. And a lot of the insurance companies changed the commercial agreements in order to reduce their risk associated with data as a liability. And you hear a lot of people say, oh, data is not an asset, it's a liability. But it really is something that you could protect and manage. And it's very hard to come up with a valuation system that everybody can agree on. There's a bit of an art to it. Does that mean you shouldn't do it? And our argument would be, no, you should start now. You should start building the capabilities to understand what your data is, to classify it, to protect the sensitive aspects of it, to tie it into your data governance programs to demonstrate the business value in a way that the business can understand, despite these issues. And so if you think of data as an asset, you're going to invest in it, you're going to hire people, you're going to inventory those assets, and you're going to understand you're going to measure data value. If you really believe that data is an asset, then shouldn't you invest in inventorying your data and understanding what it might be potentially worth? And we think the way to drive data, we talked about this, to measure data value, is there's a holistic view. What is my company worth? Which piece of it is intangible? Which piece of that intangible is related to data? But also, what are the use cases, whether it's ROI for sales, whether it's different commercialization aspects, whether it's building new products. These specific use cases can demonstrate an ROI. So I can have a holistic view of what my data is, and then I can have use case specific data valuation models. And this is the direction that we see people going, where you're going to be processing, you're going to value your data, figure out what it might be worth market-wise, figure out what it might be worth from a discounted cash flow perspective, figure out what it might be inherently worth. What if you lost your data and had to replace it? What would that cost? What type of risk is associated with data loss, going back to the commercial view? And there's really three methods to look at your data valuation. There's a cost basis. What did it cost me to acquire this data? There's a market basis. What does the market pay for client lists, for a variety of different use cases we could share with you? And what's a cash flow basis? What can this generate for my business? And that could be internally and externally. A lot of times when we think of commercialization, it's not just externally, it's also internally. And this can help build a lot of support for data programs. Speaking in the language of data finance, speaking in a vocabulary that talks about your business goals. I always like to share this art. I do a lot of data governance. I'm a big believer, and we have Eric here talking about CDMC. We're moving to cloud. How do we govern and protect our data effectively? How do we take what we've learned over the last 10, 15 years about managing data and finance and apply it to your migrations to the cloud? Well, if you can do that in a way that demonstrates an ROI, that says by moving this up to the cloud, we were able to share data with key clients, or we were able to share data between our federated businesses and generate an economic return, that's something that the business can get behind, as opposed to technical drivers for cloud implementation. So these are the three big methods here. I'm going to pause here for just a second to see if anybody has questions, try and engage the room. I know we have a lot of smart people here. Yes, sir. Is that okay? I figured get a little interactive.
Yeah, very interesting, Joe. And I'd like to come back to what you said, that the valuation approaches differ from company to company. So everybody has their tailored approach, more or less. But don't you think, in particular from an EY perspective, that there should be some sort of, methodology be possible, which allows us to evaluate data in a comparable and also repeatable form, Because if we would end up with, let's say, lots of use cases and generalize from them, perhaps the idea of such a general approach or methodology might be realistic, and then it would be something that could be also be applied. I don't know, in auditing practices or something. At least that's my vision, my hope that we someday come to this point. And I think the more we engage into these, let's say, practical examples of putting a value and perhaps even a dollar tag to the data resource, the more likely that will be to happen. Do you agree with that, or do you think
I completely
it's, you know,
agree. And the good news is we're moving in that direction. In fact, there's the business. So I'm 2 slides ahead, but there's an industry consortium that focused on data valuation. Matt Knoll, my colleague from EY, is over here, and he participated with Sunil in that consortium. That's from a data perspective. There's an implied question, how do we move that to the accounting perspective? And I've talked to some of my colleagues, and it has to be done in an industry perspective. There has to be a business driver. And once you move to the accounting space, the level of surety has to get more certain. And so we do work now within EY where we do data evaluations we published something for the British National Health Service that looked at the value of their data. They have 50, 60 years, 80 years of healthcare data. What could that be worth? But that's a very specific use case, and that's the caution that I think the accounting industry is going to move in, that will value the data for this specific use case. We'll harness these methods that are growing organically from the data community, but ultimately, it may take a decade. I think we'll get to a point where there's consensus about here's the proper way to value data from an accounting perspective, where you have a degree of surety, but we're a long way up that ramp. The question is, do we do nothing in the meantime, or do we step forward? And this is why I'm so excited about this conversation we're having here, in that we are having the EDMC and other groups are putting together teams, industry groups that are looking at this intelligently. They're looking at it carefully. We published a white paper on data valuation. We, being EDMC, published a white paper on data valuation and how to show ROI. So these movements forward, I think, are tremendous progress and will ultimately lead us to what is at the heart of your question. Okay, we're good on time? Okay. So I would say that 4 or 5 years ago, when I first was introduced to Infonomics, I got so excited. I said, oh, data valuation is coming. And I took the course with Doug Laney, who a lot of these ideas I attribute to him. And I said, everybody's going to be excited about this. It's going to take off like a rocket. It didn't take off like a rocket. I did some studies. I did find that a lot of the ideas went over people's head. They didn't really understand why we were valuing data. Maybe the methods seemed a bit wonky, maybe a bit academic. Fast forward, we're in a data economy. Everybody gets the fact that data is an asset, and you're flying blind if you don't at least have a sense of what to prioritize in terms of the data you own and are stewards for. If I'm a data steward, I want to show business value. What better way for me to show business value than, as Michael illustrated, by tying my use cases to business economic outcomes? And those tools exist. So my posit, if there's one idea I want you to leave with, it's that data valuation is moving to the mainstream. It's moving to the mainstream, and more firms are going to need to develop this capability. And there's a great amount of people and ideas and information out there if you want to explore that. There's solutions such as YDC Connect. There's practical experience of business people who have used valuation effectively as part of their data strategy. And I think that's the key idea that we're trying to share. So this is kind of where I talked about the EDMC, and we got a little bit out of the sequence here, but I think we have, it's 12:10. Do you want to take some more questions as a team? Yes, and then yes. 1, 2, 3. Oh, sorry.
right
3, 2,
behind me.
1.
Great presentation, everyone. Michael, this question's maybe more for you because I'm more used to what the approach you're taking, looking for the value out of your particular initiatives. Have you gotten any debate around attribution? So you showed incremental sales, you could do lift from marketing, but then there's a lot of variables that go into that, right? Was it the promotion? Was it offer? Was there a sales incentive for bankers? Did you hit any of those kind of conversations?
Oh yes, and I have some of the horrible scars to like talk about this.
And where did you land? Did you just sort of say, we got this benefit and you couldn't do it without data, therefore?
Yep. So this is another journey for the company,
Okay.
right? Where do you attribute that value? Is it really retail bank value? Is it small business customer value, right? That you can assign like directly to a specific line of business owner, or is it, the avoidance of an MRBA that comes with a fine that would spread across the entire company and halt us from opening new relationships? I mean, where do you attribute that one to, right? So we had to all kind of politely agree to slightly disagree on where some of the ownership was. But what we did agree to was we're going to measure it with shadow P&Ls. And the normal business process that would attribute and account for those dollars on P&Ls owned by LOBs would happen, as it does through accounting today. And all we would do is roll it up differently. So we provided them with a different view. So attribution was kind of already decided by accounting, and we didn't really need to like change direction in the company. What we needed to do was come up with better rules to like create that shadow P&L statement and make it very ubiquitous, very gentle. So it didn't necessarily say, yeah, marketing got that, or small business earned this. It was valuing our data on the use cases. Here's what the use cases returned in the company, and we can go find those on P&L statements.
So what we've seen also is you can have attribution percentages. In many cases, you can't value the data itself. You have to value the use case, and data somewhere between 0 and 100%. So you saw in the example with United Airlines, 20 to 40, and then oftentimes what you can do is to say if data is less valuable. So for example, if you're a utility in a regulated industry, customer data is probably not worth 40% of the value of a customer. It may be worth much less because it's a monopoly. But if you're in a very competitive industry, like a retailer, for example, and you've got an app like McDonald's where you can actually use loyalty data to market to your customers, then the attribution percentage might be higher. But it's still an art form, and you've got to have some way to negotiate with finance on that.
Okay.
Yes.
Yeah, you kind of got to get an okay from operating committee or like accounting or something that whatever method you actually come up with is going to pass like the acid test with them.
Sure.
Otherwise, they'll never accept it.
Yeah. Another question here.
Hold on, please. We have online listeners.
Oh, sorry about that. Getting closer to putting data on the balance sheet and the product part of it, getting there is all terrific. I'm not an accountant. I don't put numbers in boxes type of thing. That's not my thing. But I do know assets depreciate over time, right?
Very good question.
And I can't say that's true of data because if you look at it, the historical data has value. And with time and use of data, so you recognize the value of data when you use it. And that's the other side of the coin. So what are the things that bring the value down
I'll answer
of
that
the
question.
data quality? How do you factor that in?
So I think the question is how do you adjust? So a very simple way to think about an analogy is a house. So if you have a house which is worth $500,000, but it needs a lot of work, so you haircut the value, correct? Then the other thing to do is maybe you don't have full rights to the house, you didn't do a proper title search, you haircut it again. So the way to think about it is the value of my customer, I've got $100 per customer is the value of my data, and I've got 1 million customers, so 100 million. Very simply, you do a data quality index. Use Informatica or Monte Carlo or the platform of your choice, and you do a data quality index. It's 80%. Now, all of a sudden, your data has gone from 100 million to 80 million, correct? And no one will argue with that. The next thing you do is to say, okay, now because of GLBA or because of GDPR or the new European Union Data Act, I don't have full rights to the data. So another way, then you start haircutting it. So you have the value of the data, 100 million, then you adjust it for data quality, and then you adjust it potentially for data rights. So now it's very simple. You say, okay, the value of the data quality program is potentially $20 million. That's a very different discussion from saying, I need $500,000 for this.
Well, I'd also like to reverse that dialogue. How can we increase the value of the data? Protect it, assign, improve the quality, make sure we have consent.
Oh.
Hi. Thank you for the great presentation and insights in terms of calculating the ROI and how you guys did it, Northwest Bank, Michael. So I heard we cannot double count the data, especially the value created, right? But my question is this, we are creating multiple data products, and cross-domain, these data products end up creating more data products. In that case, how are you going to actually attribute that additional value that the new data product created? Did you guys did it at domain level? Can you take a little deeper dive there?
You have to have some discipline around a governance structure and a data domain model.
Yeah, we've used use cases. So we've created a definitive use case. We've validated that use case, and we've worried less about the span of the use case. But now I'm going to talk like out of the other side of my mouth a second, right? Because we've seen an effect. Like we will do next best product marketing, and we will market to the customer a savings product. 4.5%, 6-month CD or 9-month product, right? To get you a little bit more interest, right? So we find that there's indirect sales that happen. Like we give the customer agrees, like, yeah, I want the CD, give me the 4.5% because that's great. But then they turn around and say, oh, you know what, I got a small business over here, and I've been meaning to sign up for positive pay. Great capability for a small business, and surprise, they sign up for small business positive pay. So touching the customer has indirectly caused us to have other outcomes that we didn't expect. And we measure it. We actually create cohorts, ones we've touched, ones we haven't touched, and we can see that differential and see that our touching the customer with an offer causes the customer sometimes to get a different offer or get two that we didn't expect.
So we have a question from our online audience. The question is, how do you determine what is led by the centralized data team and what is owned by analysts within the business?
We are still working that one out. How about that? In all fairness, we haven't quite ironed that completely. I have a team of analysts. There are analysts that are in our businesses, and we just work jointly right now. We look at them honestly as our partners in our business. Many of them are data stewards, by the way. We haven't really defined or clearly dropped lines that said, yeah, just because data team analysts start and stop, right, doesn't mean that business partner analysts also have to start and stop. We just connect them together.
Okay. Other questions here?
Hi. Building on the example that you said about customers, I come from a retail business in which we are working a lot on customer analytics. And the retail business I work for is a pharmacy chain, is used to a product-focused way of work. Like all the sales are categorized by categories of products, not customers and not data. So we've been able to prove that digital touchpoints and personalized offers increase value. Our customers that are impacted by that spend 20% more than other customers. But it's still hard to agree with everybody on an attribution model because we are aware that not only what we do with data and segmentation is impacting sales. There are so many other things that impact one sale or one behavior of a customer. So I wanted to know if you could give us a little bit more detail about how you're solving that attribution to be as objective as possible.
Yeah, so we've built I'm going to say in a way, we built a sales measurement tool in our database. We basically measure the specific sales that result from an offer within a specific period of time, and we attribute the sale events that happen back to the customer touch that occurred to make that happen. So we know the touch caused the outcome. Now, the outcome could be it could be exactly what we tried to sell the customer, sold them a CD, right, 4.5%, yay, got more deposits. But then those deposits can be used to fund a loan, or we could use those deposits to fund a treasury, something, right, a treasury instrument. Or we could use those deposits to help us lower the cost of our FDIC insurance, right? I mean, there's kind of no telling exactly where those deposits are going to go. And the attribution of that secondary capability that captures the revenue from those things are in all the different business P&L statements that we've kind of deliberately not chased right now, because we're focused on measuring the direct outcome of what we do. I don't disagree. I mean, it's there for sure. We can see it in that indirect capability, do this, that happens, and then something else happens. For sure, it's there. And we can measure that indirect attribution, that indirect lift, but we're not trying to parse it out into pieces. We honestly, it's more about getting the value fast than trying to figure out who owns the value. If I happen to drop another $1 million on a business's P&L statement, they're going to go, yay, thank you, right? I don't want to go ask for my Lamborghini, but they're not going to be upset by incremental revenue in any way. But we've definitely not solved that problem. And I actually don't think we ever will. I think that the machine that we have started to run right now is going to start just generating more and more revenue outcome. I honestly think that everyone is going to say, great, keep going, doing more, and measuring it as you have been.
Quick sidebar. With machine learning, there is some innovation happening with which attributes are used and by who and some automation, but we're not there yet, 100%.
Yeah, I don't think so.
Hi. I'm from a rate-regulated utility, so and I'm also an accountant, so and there's another one in here, so not that I know of. Anyway, my question, if we were able to put something on the balance sheet, that would be a game changer for us, because we would earn a rate of return from day one, from the moment it gets on there. So out of the three valuation methods that you showed, which one do you think would be the most likely where some kind of accounting policy standard could be developed and we could sort of get there? And then my second question is anyone kind of successfully even presented it, valued it and presented it, and even had discussions?
All right. Can I try the second question first? Yes, because there's data finance happening. So there are companies like we mentioned, but there's other smaller firms that are using their data assets in order to gain access to liquidity, and it's based upon data valuation. So the first part of the question is, what gains the most confidence, I think, with investors? And I would say it's discounted cash flow. There's market prices, but you don't know if you'll get market prices. But if I'm able to demonstrate a repeatable, recurring, just like a mortgage-backed security, every year or every quarter you're going to get 5% return.
So another thing that we are, Matt and myself and a whole bunch of people wrote a paper that should be out next week with the EDM Council called the Data Code. So if you're familiar, investors, the fundamental problem at Wall Street is when they see two assets commingle, they don't know how to value them. It's just how it is. So if you're a utility, they'll say cash flows for customers, like United Airlines. The way they were able to be successful is Mileage Plus is separate from United Airlines. So if you think about what many companies will do, so if a company hedge fund buys a retailer, they'll split it up into operating company, OpCo, property company, PropCo, right? So now what we're starting to see is companies saying, why don't I do the same thing for data? Why don't I create a data co? It doesn't mean you're selling the data, right? We're not, sometimes that has a bad connotation, selling the data. No, I just want to assign the data into a wholly owned subsidiary, and now I can raise money based on it, Or if nothing else, Wall Street's starting to think, oh, okay, that's interesting. Now I can assign a value to it. So Matt and the team and myself, we looked at a whole bunch of companies out there, and we found 31 documented instances that we know of where companies have created data cores. They all have slightly different ways that they operate. And then it opens up a whole new set of discussions around, okay, if that's a data core, who's the CEO of the data core? Is it really the chief data officer who becomes the CEO of the data core? Well, you need P&L experience, you might need some accounting experience, you need operational experience. So in the paper, we went through the 31 use cases across different industries. There's a lot in government statistical agencies, for example, their data cores. And then we took 5 in particular and did a deep dive, and only 1 out of the 5, the CEO of that data core actually was a CDO in the past. All the others were, I had a statistical background, I was in operations, I was in sales and marketing, finance. So definitely something to think about.
They're for business people.
Business people, yes.
All right, I'm another accountant, but anyways, it won't be necessarily an accounting question. Have you seen, so in data resilience, so in the case of a ransomware and you're needing to build your data back up, et cetera, have you seen valuation of data in that realm so that you can attribute a certain amount of security dollars towards security? And how have you seen the data valuation?
I'll give you an example. So there's 2 ways to do it. There's more of a deterministic approach and a probabilistic approach. The deterministic approach is, if you see historically, when companies have a data breach, there's research out there that their stock price, in the US at least, will underperform the NASDAQ by 8.6%. It doesn't mean that your stock price didn't go up. Sometimes you have companies have a data breach and the stock price goes up. What it's saying is, on average, company stock prices underperform the market by 8.6%. It depends on the severity of the breach. Another way to look at it is to say, with ransomware attacks, you can run a Monte Carlo simulation and say, what's the probability that there'll be an impact on the stock price? So that's a good way to think about it. You could use fines, you could use shareholder lawsuits, use some very objective measure about the loss, whether it's market capitalization, fines, lawsuits, whatever it might be, and then have a probability distribution, inherent and residual. And that's a way to think about that. We've definitely done work around that.
And you attribute it to the data?
So then that's where that's a very good point. So then you have to do an attribution process, because it's the chief information security officer, he or she is doing the work. So now you have to say, okay, what portion of that was around the data? It's not 100%, but that's a way to think about it.
There's also out-of-pocket costs directly with the breach, right? You might have remediation.
Correct, exactly.
It's usually $100, $200 per customer to
Yes.
clean stuff up.
We have time for maybe one more question. Anyone? There. Go.
Yeah, I was curious. You said that you have a 17 people team, and you have a backlog for 18 months. And I'm curious where probably you are doing it now, but why not, I don't know, duplicate the size of the team so you can half the time of the backlog?
So I've had many conversations about adding to my headcount, and it's a little bit of a tough business environment right now. We are watching expenses very carefully within our business. We tried an offshore team, didn't really work out like as we wanted it to. We got rid of the offshore team. Strangely enough, when we did that, our capacity to do work went up. I do have some open recs that I haven't filled, but quite frankly, I'm never going to be able to double the size of my team and be able to consume that entire backlog right away. And the rate at which it's growing, we know that we will never, ever be able to get ahead. So our answer to this has been, what is the most valuable thing that we should do next? And we have a data steering committee that meets every single month. Twice a quarter, we meet with that data steering committee. We go through priorities. We have a separate group of senior vice presidents and EVPs that we meet with to also go through priorities. And then we have a group of executive vice presidents and our IT steering committee where we go through priorities. And we get down to a list, a defined list that fits within the capacity that we have available. That is absolutely what the operating committee wants us to work on next to add the right value back to the company. The prioritization process has been our savior. It's taken a little while to get it up and running the right way, but it's been absolutely instrumental in keeping the team focused and our business partners focused on the right next things to do.
Unfortunately, that is all we have time for, so thank you all very much for an excellent session. Thank you all.
Thank you.